So we're still in the season of earnings across several jurisdictions, not only in Africa but around the world. But let's start from Uganda, where Islamic Bank's 2016 pre-tax profit rose 24.9%, helped by business diversification that spurred increase in non-interest revenue. The East African nation's largest lender by assets says on Wednesday. The lender, part of South Africa's Standard Bank Group, unlisted on the Uganda Stock Exchange, says pre-tax profit rose to 259 billion Ugandan shillings in 2016. That's higher than 203.3 billion shillings made in 2015. The bank says a diversified business model had helped to absorb economic shocks and underpin the latest growth. The results show the bank's income from trading in foreign exchange, government debts and other trading activities up 28% over 2015 level. A dividend of 1.172 shillings has been recommended for the shareholders. In North Africa, Morocco's National Investment Corporation, that's an investment holding firm controlled by the country's monarchy, has reported a 34% jump in net profit, helped by capital gains from a merger between Lafarge Cements and Holcim Maroc. Net profit attributable to shareholders who rose to 4.43 billion Moroccan dirhams from 3.31 billion dirhams a year earlier. And back in the business of banking, Barclays is in exclusive talks to sell its stake in its Zimbabwe unit to Malawi-based First Merchant Bank as the British bank continues its exit from the African continent. First Merchant Bank says it's in exclusive talks to buy out the 68% of Barclays Bank of Zimbabwe owned by the British company. Neither party disclosed the value for the prospective deal, but Barclays Bank of Zimbabwe has a market cap of $60 million US. Barclays Africa previously says it was looking to sell the stake as part of a broader exit from Africa announced a year ago, when Chief Executive Jess Sturley says the lender will instead focus on a transatlantic strategy in the US and Britain. Barclays Bank of Zimbabwe is one of two banks, together with Barclays Bank of Egypt, that do not form part of the lender's South Africa-based Barclays Africa Group, which is also up for sale. An Africa Finance Corporation today announced Dr. Joseph Nnanna, a deputy director at the Central Bank of Nigeria, as the replacement of Mrs. Sarah Alade on the board of the Lending Pan-African Multilateral Development Finance Institution. A statement issued by the AFC says the change takes effect as Mrs. Alade retires from the Central Bank as a deputy governor, earlier this week. Ms. Alade was representing Nigeria's Central Bank on the board of the Africa Finance Corporation, headquartered in Lagos. Dr. Nnanna has over 30 years' experience as an economist and banker. He was on the board of the International Monetary Fund and a consultant to the Nigerian government to the United Nations Conference on Trade and Development. Saudi Arabia's decision to cut tax paid by national oil giant or state oil corporation Saudi Aramco to smooth the company's initial public offer of shares next year is expected to increase the company's market value. The government says on Monday it was cutting the tax rate for Aramco to 50% from 85% previous as part of the preparations for next year's initial public offering, which would sell as much as 5% of Saudi Aramco and expected to be the world's largest IPO. The head of research at financial services provider Al-Raji Capital, Mazen Al-Sudari, says the IPO will be, quote, win-win for both the Saudi government and Aramco.
The government right now, actually, it's starting, the IPO steps are starting through. It's clear that the IPO might happen in 2018 or 19. This step is going to change the valuation of Aramco, since the taxation, where there is so many assumptions reducing the valuation of Aramco based on the taxation. So this taxation, this new regular of taxation, will gonna rise. It's possibly rise the valuation of Aramco. It's going to affect the Saudi economy through the diversification that the government is going to receive it. Now with the low oil prices, this privatization can create a big cash to the government, help the government to invest more and more beneficial, more privileged investment. okay, that could create jobs and enhance the GDP. The other side is going to enhance the efficiency of Aramco. So it's a win-win game to the government and to Aramco. The production capacity of Aramco, no doubt the reserve of Aramco was huge. It's the biggest reserve, but the production capacity had risen in the last 10 years in Aramco. And even now, it's the lowest cost, production cost in the world. So it used to be attractive, but still more attractive with the more spare capacity. I think it's the biggest company that has a spare capacity to almost 25% of production.
Now, the inaugural Global Manufacturing and Industrialization Summit has kicked off in Abu Dhabi. Under the banner of Restoring Global Prosperity, the four-day event is bringing together 1,200 delegates, including world leaders, ministers, and top-level industry executives, to discuss the future of manufacturing and innovation in the 21st century. The event was jointly hosted by the UAE Ministry of Economy and the United Nations Industrial Development Organization, known as UNIDO.
Governments and also the private companies, civil society gathering here to share their best practices, new technologies, and also social responsibility, other things, information, for example. It's also important when we start here, we will looking for the future. In the past, industry actually created some damage of the environment. Also, social side events actually create a very bad reputation. And now we look at the new format, a new approach of manufacturing. It should be a sustainable, it's a green and energy efficiency, efficiency of use of raw materials, etc. And second is inclusiveness, creating jobs for youth and also women, especially for poor countries. And final one, of course, it's related to a global agenda, 2030 development agenda, including the Goal 9, which is inclusive, sustainable industrialization connected to manufacturing.
Rwanda Airline is one of the youngest on the African continent, but now going really global. The airline says it will start 3 weekly flights to London's Gatwick Airport on May the 26th and expects to exceed 1 million passengers on all its routes in the next 3 to 4 years. The London route, which will be served by 2 newly acquired Airbus A330s, will be East African Airline Rwanda's 22nd destination. The airline also plans to start flights to New York, Bamako in Mali, Conakry in Guinea, and Lilongwe in Malawi. The airline says it will also start flights to Mumbai and Guangzhou in China. For the year ending July 2017, Rwanda Air was targeting a total of 750,000 passengers, up from 600,000 in the previous period. Rwanda Air has 11 aircrafts and expects delivery of a 12th, a Boeing 737-800 in the month of May. Welcome to London. That's about all for today on Business Incorporated. We hope you enjoyed. I'll see you next time.